And today is April 13th, and we had a slight down day today in the market. But what do you expect on Friday the 13th? And a shout out to Marco, Dave, Victor, Sharif, Yvonne, Adam, Snowfire, and David. These are my subscribers that are publicly shown. Now I have other subscribers, but they keep their subscriptions private so they don't show, and that's just fine. But a shout out to all of those subscribers as well and any other viewers. So it was a down day today in the market. So what can we expect coming in the future? Let's take a look. And to begin with, this chart here from Bank of America, it may not be all that visible because it's a little bit blurry even to myself. But what it shows is that the market has changed. And since the end of 2012 to the beginning of 2018, the buy the dip strategy was profitable 9 out of the 11 times during that time frame. However, in 2018, we've had a dip, but so far, buying the dip has not been all that successful. So the market has changed, if that's not obvious, for other reasons. But this strategy, think twice about it. Let's go to the price charts. This first chart here is for comparison purposes. It's advanced micro devices and the symbol is AMD and it's a 20-year monthly chart. Just want to show you this. This is what happens when a stock cracks. And you can see back in 2000 it cracked here. And then in 2006 it actually started at this point before the rest of the market started to crack. And if you go back here into early 2017, it started to form its crack there, and by mid 2017 it was heading down. And looking into the MACD, you can see each of those time frames here, here, and here. And this chart here in 2017, it's not as robust of a crack as it was back in these two time periods, but you still get the idea. And so that's what happens when these stocks head down on the MACD and start heading down on all these other oscillators as well. Give you an idea of what to look for when you have a stock and you're doing your analysis, both fundamental and technical. You want to look for indications of that crack in the stock, beginning with some of those oscillators, and you want to have a lot of the oscillators align. Don't just make a judgment based on one oscillator. All right, so that's how that looks. Let's go to the spiders. 20-year monthly chart on the spiders with a close today of 265.15. We had the top late 2017, early 2018 at that point there, and then the sell-off recently. Moving down here into the MACD, the fast line still hovering above the slow line or trigger line. What I'm expecting here is for the fast line to come on down and then perhaps reflect back up. Something perhaps along the lines of what happened there, and perhaps something along the lines that happened here. We had a little bit of a reflection here in 2014 as well. So we're not looking for an absolute punch through. It's always possible, but I think the greater probability is a reflection. And then at that point, that's where there's going to be some real danger. Looking here at the histogram is falling pretty quickly as well. So there is a possibility that the market can head further south at this time. I don't, again, expect that. I think the higher probability is a reflection. Looking at the momentum, the price rate of change here, fast line did move through the slow line. Relative strength, it's heading down pretty fast. Stochastics also heading down pretty fast. The volume is not too bad. And the Williams heading down pretty fast here, but we're looking like a reflection point here. And I think that's possibly what we will get here on at least the price chart, is for the price from this point on We're doing some muddling here. We'll look at that here in the shorter term price chart shortly, but I think that the prices are going to head back up here. And at this point, I'm going to be looking for a double top, and that'll be pretty dangerous if that's what happens. So now let's go to the 6-month daily chart on the spiders. 6-month daily chart on the spiders. And since early April, we've moved on up here, and it looks like we have run into the 20 and the 50 EMA. And so we're going to get some congestion here. And I think if you look back, there's a few other periods where there's been some congestion, either on the way up or on the way down. Not too unexpected. Looking at the MACD, looks like the MACD has bottomed here. Fast line moving through the trigger line. Looks fairly healthy, and it looks like it's starting to increase in speed. And then you can see there in the histogram that the separation is beginning to widen. So it's gaining some traction. The momentum, a little bit of hesitation at the 0 line. Price rate change, very healthy on its upward move. Looking down here to the RSI is moderately weak. It's not too bad, but it doesn't look real strong. Stochastic does look strong. Looks like it's heading up, moving through the midline 50 there. The volume looks okay. A little bit of lower volume in the last few days than it was here in late March, early April. And the Williams has already headed on up and has a little hesitation here, so that's perhaps is part of the problem. Moving back up here, I've wanted to see the chart complete a W formation that we've been looking at for quite some time. Down, up, down, and then heading up. We're having a bit of problem here, but we'll just have to wait to see if that punches through the 50 EMA and then on its way up. Still a lot of danger here between this level here and of course up here to the previous high. So we're going to be watching closely. And then once we do, if we do get up to this point, then I'm going to take a real close look at that to see if we have a double top formation. That would show a lot of risk or indicate a lot of risk to me. But for now, it looks like we still have to deal with the 50 and the 20 EMA on its way up. So hopefully that will rectify here shortly, and in the next few weeks see if we can head on up to the previous high. So for today, that's ChewDog Charts. Thank you.